Good afternoon and welcome to GrainTV. It's November 29th, 2012. To my left is Logan Burgess and I'm Brock Shimbino. The grains were mixed in today's trade. Let's turn over to Fire Tip, see what happened in Chicago. Corn for December was down 9 1/4 cents. Beans January up 2 3/4 cents. Wheat in Chicago down 4 1/2 cents. Kansas City wheat was only down about a penny today. Seemed like early on in the trade, Logan, export sales were really the driving force.
Yeah, you know, Brock, if we do take a look at the numbers there released in the export sales report, now these are combined for the current and next marketing year, but corn, the big story out of this report this morning, really not meeting trade expectations. You can see here the average trade guess was somewhere between 450 and 650,000 metric tons there. All we had reported this morning was 263,000 metric tons. So it seems like on the heel of last week's report, the bar got set a little bit high in terms of expectations for this corn market, and in terms of export sales, it simply wasn't able to deliver this morning, certainly helping the corn market move lower. Soybeans and wheat, a similar story here, both coming in, as you can see with this table, at the low end of expectations. And you know, for soybeans, this is really a deviation from what we've been seeing throughout the marketing year. Export sales have remained very strong, but this week, similar to corn, not able to meet trade expectations there. You know, Brock, right now we've been looking at some models that's tracking the pace of corn and soybean export sales throughout the current marketing year. You want to kind of break down how this model is affected by these numbers?
Yeah, if we take a look at the soybean export sales that we have been tracking, the red line is what we should be seeing for given seasonalities to meet the USDA current expectations. The blue bars are what we actually are seeing for sales. As you can see, this week we fell a little bit short of what we should be seeing. You know, we're still about 170 million bushels ahead of pace to meet the current expectations. We brought a lot of sales in from last year into this marketing year, so I think that's really the contributing factor for us still being ahead. But we did fall another 10 million bushels this week. You know, corn's a little bit different story. We have fallen behind pace by about 14 million bushels. You can see here last week's we had that big sale, those big export sales. Right. But again, this week we fall back to where we kind of have been lagging behind again on the export sales. We fell another 5 million bushels this week. So you know, this really shows that, you know, soybeans we still have pretty strong demand even though we missed the mark this week. A couple of bright spots for soybeans was soybean meal and soybean oil. We had pretty good sales there. But corn really, you know, the story remains the same. The demand scenario is really the area we need to be concerned about right now.
Yeah, you know, a lot of corn bulls out there had to have been disappointed by the export sales number this week. You know, and we talked about it a little bit yesterday. The numbers released yesterday by the EIA in terms of ethanol production, we plugged them into our model here. And as you can see right now, we're still expecting corn use going to ethanol coming in about 125 million bushels below what the USDA currently has as their corn to ethanol number. It's currently sitting at 4.5 million bushels, or billion bushels there, excuse me. If you take a look at the chart here, though, we do have yesterday's production number put in here. The green line, keep in mind, is the pace needed to achieve our production estimate for the marketing year, which is, as I said, below by about 125 million bushels, the current USDA estimate. So bottom line here, right now the pace of ethanol production is really lagging, and we're expecting a downgrade in the USDA's ethanol number by about 50 million bushels in the December WASDE. You know, there is a chance that they may hold out until the January report when we get a more thorough idea of this corn crop. But the bottom line is right now, with the current pace of ethanol production, the USDA is going to need to make a downgrade. And if we take a look at the margins right now, margins historically are extremely weak for ethanol producers, and that's certainly not going to bode well for production here moving forward.
Make sure you follow us on Twitter for all the updates throughout the day. Check us out on Facebook or get a hold of us at 877-472-4607.
Have a good one.